Hi folks, welcome to Happy Easter weekend webinar coming to you from Port Stephens, Australia. Going to do a quick wrap up of global markets this weekend. Apologies for the delay, but it is holidays, so I'm going to cover off on the Dow, gold markets, bond markets, currency markets, have a look at what's potentially going to move this week, and where the key focuses are in the world this week. So we'll be about 45 minutes, maybe half an hour. If you do have any questions, please reach out to us at www.tradingsafely.com.au. Sean's on holidays at the moment, so it'll just be me tonight covering off on the major markets. So without further ado, I might just share screens and we're just going to jump straight into it to keep us pretty. Back in Port Stephens, and the kids are running around, so apologies if we do get any interruptions tonight. So first things first, however, why should you listen to Sean and I? Look, I've been trading for about 15 years. I worked for Optiva Australia, made over $100 million trading for them. Been a keen software developer since then. I've written a few of the studies that are in the Chart IQ software pack alongside Sean's, and Sean himself has been a trader, technical analyst, traded almost everything that moves for the last sort of 37 years, very well known, outright software developer himself, and he's semi-retired these days. So please just take a quick look at our general information and disclaimer. And just while you do that, I want to sort of reflect on the week last week. Equities are obviously testing lower. If I think about the Dow in particular, we're testing. I think on Friday we closed at last quarter's midpoint. So we are into a deep support zone right now. The weekly trend, I think, is probably really the only time frame that's trending down in equities, American equities anyway. You've got yearly uptrends, quarterly uptrends, semi-annual uptrends, and just a short-term downtrend, really to test the longer-term uptrends. And right now, it looks like we're coming into some support now, so potentially expecting a little bit of a bounce this week, but step by step, wait for the weekly close. Last week gave us a bearish close, but it was into support. So pretty keen to see how we come out of this week. If we start on the gold market, it's a 720-minute chart of gold. Each of the pivots reflect different time frames. So we've got green is daily, weekly is yellow, pink is monthly, quarterly is brown, semi-annual is blue, and annual is orange. So really what we're looking for is to assess the closes and how each time frame is trending. Are we trending with the major time frame, or have we got a short-term move against the trend? So if I look at gold, we go back to the start of the end of 2016. The market closed effectively neutral because we closed between the two annual pivots. Now, since then, gold has had a oversold corrective reaction up. We did get very oversold on the downside, and I know that because these two pink monthly pivots moved underneath the two quarterly pivots, and when that happens, that generates an oversold position, and so we've had a corrective move now since then. Now, what's interesting, and I pointed this out a couple of weeks back, is that at the end of the March quarter, we actually did close bullish. So by that I mean we closed above this upper quarterly pivot. However, you need to be mindful that a quarter is a long time. So despite the fact that it looks like gold is rotating to the upside, we need to be mindful that well, in my mind, we are approaching overbought levels. We haven't seen any weakness yet from gold. Certainly last week actually gave us quite a strong move higher. But I am wary of where we are now. I think gold longer term is turning around to the upside. But the reason I am wary right now is because for those of you that have been sort of watching us for a while now, when you get pivots that move outside of each other, so here this brown upper quarterly level has moved outside of the yearly level, whereas down here the pivot was inside. Well, when you get pivots that move outside each other, it's indicative of a potential overextension. And so when you get a quarterly yearly overextension, it can mean that the market can turn down quite hard the other way. So gold, I'm very what's the word? Despite the fact that the market's strong right here, I do have concerns that we are potentially moving into a very overbought state. And although we have the quarterly time frame has flipped around to a buy, longer term, if you go back to the end of 2015, we're still on a bearish overall signal. So gold's not the easiest market at the moment. It feels like it's rotating. Well, it's not feels like, it is rotating across higher time frames. So on the one hand, you still have a yearly downtrend, but you do have the quarterly time frame flipping around to support. And now we've had this move higher. We are coming into the quarterly pivots outside the yearly, so it can potentially turn down again. So really, for me, I'm kind of standing aside of gold at the minute because it does have conflicting longer term signals, which is typical of a long term rotation. So I'm very interested in watching gold in the long term. Not so interested in trading it right now because of this multiple higher time frame sort of rotation that's going on. That said, we've approached the middle of the month. Middle of the month is often a place where the market can turn. And if I zoom into the ultra short term, and we look at this weekly upper pivot here for this week at 1304, it's now moved above the monthly pivot. And we've got the quarterly pivot above the yearly pivot. So gold is effectively short term, potentially overbought. So I'm on alert for any failures here with gold. And the reason I say that is because we still haven't had a yearly bullish close. Like last year, 2016, it closed bullish. Then fair enough. Okay, I'd be looking for the market to go higher, but it didn't. So I'm quite wary of this push up, of this reaction, or what appears to be a reactionary push up with gold. So for me, last week we talked about gold and we said, well, okay, well, the previous 2 weeks had closed effectively neutral, so we couldn't close above or below the weekly reversals, and then last week we had a major move higher. That's fine, but we are at we've moved into quite an overbought zone, so I wouldn't be not looking to get long at these levels by any stretch. Watching and waiting with gold. Silver's a very similar story. Now I've come up to this annual bullish reversal. The market's going to do a bit of work around this level. Just inspecting that, it looks like it's almost a replica of gold. Let me see. So at the end of last year, it got oversold, corrected move higher, and now at the monthly level, silver looks couldn't close above that upper bullish level. So there are, I guess what I'm trying to say is metals giving very mixed signals. There isn't a clear path here. On the one hand, you've got quarterly buy signals, but then on the other hand, you've got monthly weakness, and you still don't have the long-term buy signals that, at the yearly level that we need for the metals to turn. So I think metals are turning long-term, but I'm not sure that we've seen the low yet. So I'm basically steering clear of these at the minute until we get at least a monthly monthly signal to indicate that we're going up. But so far that's not happening. If I slip back to equities now, Dow Jones, as I mentioned on the intro, Dow Jones, if we go back to the end of 2016, we've got quarterly and semi-annual and monthly buy signals there. So the long-term trends are all up. Just recently, however, we've got this monthly overbought. So, and what do I mean by that? Well, that pink line there, that's the monthly bullish level that moved outside of the quarterly level, as opposed to this situation here where the monthly pink pivots are inside the band pivots. So when we see this, we kind of expect the market to pull back, and that's what it's doing. If I was to overlay midpoints in time just now, this will give you a bit of a different feel. So right now, as of Friday, we're actually just pulling back to last quarter's midpoint. So there's a bit of a mean reversion test there. Strong markets will fly out of there. So I'm very wary that maybe equities can bounce this week. And the reason I say that is because when I look at bonds and a few other markets, there's signs of bonds are up against major yearly resistance levels. They had a big sell-off last year, broke down. Now they're back testing. So I'm not saying equities or bonds can't continue more in that direction, but because we are at major levels, this is the place where you need to be paying attention for a reversal. So if you happen to be short equities in the short term, then you better be careful this week because you are at a major quarterly support. And if you are long bonds against the trend, then you better be careful because you are at a major yearly resistance level that could turn down and turn down hard. And in the short term, I guess what you'd be looking for is like a daily close over the daily upper bullish pivot or something to give you that reversal signal. So if I just flipped over to 30-year bonds now. Okay, so 30-year bonds, US bonds, they had an epic sell-off at the end of last year. And okay, so there's the major high up there. And at the end of last year, we closed all the way down here, absolutely miles under that lower quarterly pivot. And we've been in sideways ever since. And, we've now come up to this upper monthly pivot in pink. For something that's in a downtrend, this is the place to start watching for reversals. And, in particular, even if you zoom into the short term, I can see this weekly upper pivot there in yellow has moved above the monthly upper pivot. So that is a place, an early indication that this is a spot where bonds can turn down. If I add in a few long-term support and resistances, yearly, so we've come right up to a yearly level at the moment. So this is a big zone. So market sort of comes up and tests this monthly pivot here and fails, and we end up back under 15311 pretty quickly. Well, then that's telling you something. So early indications to be aware for a reversal in equities and bonds this week. If I look at the E-mini, the S&P 500 futures, Okay, long-term buy signals. We closed above this quarterly bullish, this semi-annual bullish. We've moved higher since. We took out another quarterly bullish here. And to achieve a long-term buy signal, you have to get overbought in the short term. And I see that a lot, where you take out these significant long-term time frames, and then you have these pullbacks. That's perfectly normal, and the pullbacks are always proportional to the time frame that you're trading. So, where you close above a quarterly bullish level, you should expect to see, expect a quarterly bearish retest. Like with Nat Gas, for example, it took out a yearly buy signal last year. So it closed above the upper pivot, gave you a buy signal. There it is there. Hang on, I'm just going to remove these. Okay, so there's the yearly bullish level. We're closed all the way up there, so we got the yearly buy signal. And look at the move that followed that. It's this enormous rip down, but that is typical. There's a typical test of a long-term trend, folks, and you see how rapidly we've covered from that, and not expect Nat Gas to be going higher and rejoining the annual trend that was confirmed at the end of 2016. If I move to, I might as well have a quick look at oil, or here on energy. So oil gave a yearly buy signal last year. So there's the lower yearly pivot. There's the upper yearly bullish level. We closed up here. So long term, oil is in a yearly, semi-annual, quarterly, and monthly uptrend. And this recent move to the downside was purely just trying to test out this quarterly bearish level. It got nowhere near it, so all stronger than you think. It does have yearly and long-term buy signals. Out of the last 3 weeks, we've had two bullish closes, a bit of a pause this week. There's some short-term, potentially oil short-term weak, because the weekly upper pivot's moved above the monthly. But you would need really a weekly close to the downside for a move lower. And given that the uptrends, the higher time frames are all up, then you'll be looking for an opportunity to buy oil on dips, given the long-term trends that are in place. If I look to some of the currencies, let's have a look at euro, US dollar. Okay, so euro US dollars in long-term downtrend, so it's got yearly, semi-annual, and quarterly downtrends in place. There's been a sort of a period of consolidation since the end of 2016, and the reason why is because we got oversold, at the monthly level. So those two monthly pink pivots there moved outside of the two brown quarterly pivots, and when that happens, you can expect like a retest or a consolidation. That's exactly what's happened. In the last 2 months, we've failed to take out these upper monthly pivots. That means the pressure is on the euro again to the downside. More specifically in the short term, if I look back at the end of March, we had this bearish weekly close there, and since then we have not been able to close over any of the upper weekly pivots in yellow. So the short term and the long term trend is down now on the euro at the moment. If I move over to the pound, has been more resilient. We've touched on this a few times. It is also in a long-term downtrend, and do expect pound US dollar to go a lot further down in due course. But everything in time. So more specifically, I was quite surprised at the end of March, right on the last day of the year. I see this a lot, folks, but right at the last day of the year, the pound popped up and took out that upper monthly bullish level in pink there, and that's why the pound has been hanging around and not going down. So we still have monthly and weekly uptrends in place for the pound. Having said that, it is against quarterly, semi-annual, and yearly downtrends. So it is a matter of time for the pound. The pound, if it was weak, it would not have closed above the upper bullish monthly level. And so when you see that happen, you need to just take a step back and go, okay, well, the pound, despite the long-term downtrends, if it was about to go down immediately, well, it shouldn't have taken out that upper monthly bullish level. So that probably has implications for pound pairs on the cross. So euro pound, anything against the pound, and the pound's going to be relatively strong. I've been following the euro pound for some time now. You've got the euros relatively weak, but the pound is showing signs of strength. And sure enough, look at the euro pound; it's been getting touched up lately. The euro pound got extremely overbought, sort of towards November 16, and by that I mean these two brown quarterly pivots moved outside the yearly pivots, and that is a sign of overbought. And then we had this monthly close down here where we closed under the monthly bearish level, and since then you'll notice that we haven't been able to close every month. Since then we've been able to close above that upper bullish level, and now euro pound is turning down, so looks in a bit of trouble. Looks like this high that we've made could be a major high, and at the moment we are in a monthly downtrend for euro pound. So looking for further, we see on Friday here we took out that lower weekly pivot on close, so it looks like the euro pound higher time frame trends are starting to kick again, probably going a lot lower. Dollar index been doing a fair bit of work. Long-term trend is up. That's clear. If you look at, say, a yearly chart, always worth looking at a yearly chart, folks. Put everything in perspective. So I've got the computer thinking now. But the dollar, the dollar is strong until we get like a yearly reversal downside. You've got to stick with the trend that's in place. So I'm just going to move this over here. Let's have a look at the yearly trend, dollar index. Right. Okay, so we had a major consolidation in the dollar. This is a yearly chart between 2008 and 2012. And then we took out the yearly bullish level there in 2014. And really we're just having a bit of a consolidation. Last year failed to take out that sort of upper level there, but that's by no means a bearish indication. We've got a lot of support here at the yearly level down here at 97.38. This pattern or this sort of breakout is indicative of moving higher. So, we're only a couple of bars above this major breakout level. That can be up to 6 bars in a row, so 6 years. So, with rates rising up after being, artificially held low for 7 years, I'm mindful the dollar does move a lot higher because there's approximately $12 trillion worth of US denominated debt floating around in emerging markets, and as rates rise, and you're going to have countries scrambling to repay that debt, and that all means the demand for US dollars. So I'm definitely not. I'm not one of those people that thinks the US dollar is going down. I think it's going up, and it's going to go up hard because of the number of shorts out there. So right now, if I look at the mix of trends in place, we've got yearly and semi-annual uptrends. We had a bearish quarterly close last year. That's fine. That just means it wants to test some of the long-term trends, which is the semi-annual and yearly. So far, the semi-annual's fine. So the semi-annual's held, and for me, if we were to get another monthly bullish close above 1017 at the end of April, then I would be expecting the dollar to be trading a lot higher. So long-term dollar index still up, and it has ramifications for a lot of the pairs out there. Euro down, pound down, but at a different speed. What other markets are there? We're not going to cover share markets tonight. It's going to be a brief sort of session. I'll let Sean do share markets next week. I might even leave it there. Actually, it is a long Easter weekend, and on that basis, we might just keep tonight's event short. If you do have any questions, please reach out to us via the email that's on the website. If you do want to get involved, jump online. We've got our online community. We've got various packages available. So on that note, I think I'll just wrap it up here, and we'll chat to everyone, all our subscribers on the Facebook site. It's a private community group where we give 24-hour updates. It's pretty cool, and we'll look forward to chatting to everyone there. So hope you've all had a happy Easter, and good luck trading this weekend. I'll chat to you next weekend.